Well, Vladimir Nedlejkovic, head of exchange traded products at Absa CIB, joins us for a look at South Africa's ETF performance. Vladimir, should we be investing in ETFs and forget about the active fund managers?
Yes, you should be investing in
okay, goodbye.
Funds. The second part, I didn't say that we should forget about active necessarily. There have been lots of debate over the last 10 years about active versus passive. And I think that debate has kind of morphed into active and passive. And lots of people are trying to combine active solutions or active investment products and passive ETFs into solutions that will be there to satisfy the needs of particular investors. And we're talking about multi-asset retirement products, and we have quite a lot of developments there.
Vladimir, is it the case, because of the proliferation of ETFs worldwide now? I mean, it's a massive, massive industry. Your Platinum ETF, for example, has been so successful. It's been fantastic, not just locally, but also with international investors. I can buy a Platinum ETF, a Gold ETF, an All-Share ETF, a Shanghai Composite ETF, an S&P 500 ETF, a European ETF. I can get a whole geographical spread and a multi-asset class spread as well. I don't need these financial services professionals that we're interviewing at this very moment, do I? They're redundant now, surely.
I think where the game is moving, and I think where the value is going to start, or the value add is going to start happening, is not so much in providing the components, the index trackers, the funds that will track a particular asset or an asset class. I think the value add is in combining those into a proper solution. So we are talking about asset allocation, and I think that is something that is where the real value lies.
Vladimir, do you think that the use of it will therefore grow in South Africa to the point where it's similar to the global demand for ETFs? So if you look globally, the market has kind of embraced ETFs, and it
Correct.
represents quite a big percentage of what people invest in. In South Africa, my understanding is that it's still a relatively small market, but obviously growing. Do you think it can get to those sorts of comparable levels? I
think, first of all, when you look at the assets globally, ETFs have been embraced, and we're talking about more than $1.5 trillion in assets. But compared to the overall size of the market, they're still small, even globally. They are growing and they're being embraced, and I think we are seeing the same thing here. The financial industry is, by its nature, quite conservative. I always remind myself the statistics that the first unit trust in South Africa was created in 1964. And they struggled until kind of mid-90s, end of the 90s, when they exploded in the assets and the number of funds. I don't think we are going to see that long period of ETFs being in wilderness. We see quite a lot of new developments in the ETFs. We are having quite a lot of assets. We're having about 60 billion rand in ETFs in South Africa, and that is growing quite rapidly. And I think we will see much more in that space.
Satrix 40 is still the most popular, with 8 billion in funds under management at the end.
Third largest.
Third largest, my apologies.
After the
so it's one of the most popular,
yes.
Should be the terminology that I use.
Yes.
It has a strong first move advantage. Obviously the others are gaining in terms of size and momentum.
Sure. I think the Satrix was the first, obviously, and we see that even internationally, the funds that track the benchmark, the main benchmark index, will always tend to be extremely popular. At the moment, we do have several funds tracking top 40 or SWIX exposure, so now it's becoming more about price and narrow spreads and all that. But I think besides Satrix, we are seeing lots of development in other asset classes, from commodities to fixed income to money market to multi-asset to sector funds. And you can now construct, as Lindsay said, you can construct a decent investment portfolio, well-diversified investment portfolio using only exchange-traded funds.
Lindsay, it sounds like the way to go.
There's always a there's always a downside though, Bronwyn. I mean, the upside is that it's easy for a numbskull like me to get into all sorts of products which I couldn't possibly have dreamed of 10 years ago before ETFs were invented. But on the other hand, when the gold price fell from $1,930 an ounce down to below $1,200, every single headline was ETF outflows. So, Vladimir, is the ETF market becoming so big? You said it's still a small percentage, but it's still big compared to, say, 5 years ago. Is it increasing volatility and then instability therefore in markets?
That is potentially so. That's why I'm kind of more insisting not so much on the component products, i.e. the individual ETFs. I'm talking about, particularly in the retail space, about multi-asset solutions. So there needs to be a professional asset allocator that will decide what is the optimal proportion of new gold versus Satrix versus something else.
Can you just repeat that? There needs to be a just say that again, a professional
asset allocator, asset allocation. Basically, fund managers, normal fund managers, they have a mandate and they will just select stocks, buy and sell. There's lots of arguments, do they add value over the long-term basis or not? And I'm not going to enter into that discussion. But there is definitely a value to be added in combining the components into a meaningful whole.
Do you think that I agree with you, so it has a role to play in, say, a balanced fund or some sort of construction around asset allocation? Do you think that includes sector funds, or is it more confined to being able to buy commodities? In other words, where a person wants an exposure to a particular area of investing, but they don't want an exposure necessarily to the company. So you buy the platinum ETF as opposed to buying the platinum companies. And now that's become quite attractive amongst active fund managers.
Correct.
Do you think it can grow beyond that?
Well, I think there are a couple of things here. In the fund management industry, I don't think it's feasible for an ETF providers to provide components that asset managers will use, because that's their business. They are there to manage funds. But if you have a fund that is providing an exposure to an asset that the asset manager cannot replicate themselves, obviously they will be used for that. That's why New Gold and New Plat are quite popular. Outside of the asset management industry, I'm talking about pension fund industry, retirement product, retail. There is a need for ETFs, and I think we are going to see more of that.
Isn't the popularity of the ETF environment going to be boosted by what you mentioned earlier? That's the cost factor, in that especially as we enter a more permanent low yield environment, costs are going to be the name of the game. And Kevin, that may put pressure on the active managers.
It really has.
Yeah, costs are incredibly important. I mean, we are looking at in particular, we are quite busy looking at the retirement industry in our business and retirement products. And simple estimate was back of the envelope calculation. Look at the difference between investment in a standard retirement annuity and same product done using passive components. Turns out that over a long period of time, and your retirement investment is about 40-year time horizon, you can basically lose 50% of your wealth just in fees or in aggregate, and that is the biggest factor, the largest factor in the performance or otherwise of a product. Not so much the investment performance.
So important what's happened in the platinum industry in South Africa. I want to use your platinum ETF as an example, Vladimir, if I can, because with the worldwide focus on South Africa and the labour strife in the Rustenburg area and beyond, people will say to themselves, well, I still like platinum because it's a viable metal for the future. But on the other hand, I don't want to invest in Anglo-American platinum or Lonmin or Northern or Impala platinum, so I've got this ETF now. So I think that in that regard, never mind cost and efficiency, it's a very important product. What are you going to do next? Is there a palladium ETF? Is there a PGM ETF? I mean, the sky's the limit, isn't it?
Yeah, there is a palladium ETF. That's as far
You're behind the times, Lindsay.
That's as far as I'm going to
Oh, you were behind the
on
times
this
earlier
one.
on, excuse me, with that Satrix comment.
Okay, I take that. That was really, it was inappropriate, my Satrix comment, when you are already way ahead of that. Yes, absolutely, I deserve it.
Vladimir, how would you respond to the following statement? And I'm not saying that it's necessarily backed up by a whole lot of facts, but there is a suggestion that in South Africa, the growth of the ETF market is becoming more popular. It's becoming itself more expensive. In other words, people are utilizing that opportunistically, and really, when you analyze it, perhaps ETFs are not as cheap as you really think.
Depending on what ETFs you're looking at, there are some expensive ones, some cheaper ones. I think on average, I think they're getting actually cheaper. I know that on average, the total expense ratio of ETFs in South Africa about 0.5%. One can argue whether that's expensive or not. It's way more expensive than anything in the active space in South Africa. But we've seen downward pressure on the cost, on the fees for ETFs. Our ETFs are running at about 20 to 30 basis points. I think, yes, if you're a PIC, and if you want to buy 10 billion rand worth of segregated mandate investment, yes, you can get it cheaper. But for the small to medium-sized investors, even some large investors, 20, 30 basis points in total expense ratio, that is really cheap.